This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets and the SPY technical analysis for October 8th, 2025. And with that said, let's go ahead and jump straight into the data. The data for Tuesday, October 7th, we had multiple Fed speakers today. Many of them were fairly dovish. I didn't go over the transcripts of every single Fed speaker, but I did see some, just notes that were key from each discussion or each speech that they said. And overall, they were fairly dovish. Many of them were discussing the weakness in the labor market and, essentially that there are going to be interest rate cuts. It's just they have to be careful in how quickly they cut and how deeply they cut. So, I guess that's a somewhat hawkish term, but overall, it is really dovish. Now, the 3-year auction came in a little bit higher today, and I do believe that's due to the 1-year consumer inflation expectations, as well as the GDP now. I don't know. I don't really know why that would go much higher. We saw TLT moving up today, even with that going slightly higher. So it might just be part of the. Sorry, I'm extremely exhausted right now. It might be part of that 1 to 3 month period after the rate cut cycle starts again that you see yields moving higher. This might just be part of that because I know that a lot of the Fed speakers weren't really discussing the inflation aspect. Many of them kind of dispelled that. They did say they're keeping their eyes on the tariff inflation, and potentially it may not even be over. So maybe that was what caused the slight uptick in the 3-year. We'll see. I do believe that they'll kind of pull down and normalize probably within a few weeks. Very likely next reading, they'll be pulling down to the 3.3, 3.4%. Now, oh no, I wanted to go over the consumer credit. So consumer credit is way down. I know that was a pretty big thing for the market today. Now, this did come later in the afternoon, so it's really not going to affect things until tomorrow. It's hard to say if this is going to be bullish or bearish. This should be technically pulling the dollar downward, but we're seeing the dollar pretty much on an absolute tear right now. I think it's heading up towards 99 right now. Hold on, let me take a look. Yeah, it's at 98.86 currently, heading up towards 99. So, we'll see. We'll see. Anyway, enough rambling. Tomorrow, Wednesday, not a super big day. We have, again, a few Fed speakers. We have the 10-year note auction, which that is very important. Based on how the 3-year auction went, this very likely goes up towards the 4.1, 4.2%. We'll see though. 10 years obviously a very different spread from the 3-year. Potentially the consumer credit and everything can cause that to, pull back down. At 2 p.m. or no, let's see. They've been changing their time frames on everything. So at 3 p.m. they're doing the FOMC meeting minutes. This meeting minutes is going to be very important. The reason why is there's been obviously major contention within the Fed, but there's also a new Fed member, and we no longer have Fed member Cook, so, well, I guess ex-Fed member. So, reading the FOMC meeting minutes is going to be super important, and especially because there was one of the Fed members on the dot plot, which everyone knows it was Fed member Moran, but his dot on the dot plot for 2025 was down in the 2% in the interest rate. So that's a very, very large, um, you know, essentially saying that they're going to have to move rates down over a whole percentage point. So we'll see. Um, but there's definitely a lot of different opinions in the Fed right now, which isn't something that's standard at all. Usually the Fed is fairly well united, and they might have different opinions, but they can generally pull together and form a somewhat cohesive idea. So anyway, that's going on tomorrow. 10-year note auction. That's going to be important. FOMC meeting minutes, super important, obviously. We do have Kashkari speaking later in the day, so anything he says will be affecting the market on Thursday. Now, Thursday's a really important day. Between Thursday and Friday are the really key days this week, as we have, the jobless claims. That's going to be a very, very, very important data set over the next probably half of a year, unless we see the jobless claims just completely fall. So, yeah, we have the unemployment rate, the non-farm payrolls on Friday. So, very, very, very key labor market data that's coming in this week. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And going over the SPY technical analysis, as always, let's quickly take a look at our Bollinger Bands and moving averages. Now, in yesterday's video, I discussed how the market very, very likely today, the 7th, would pull downward and test the bottom bounds of the 5-MA. That did occur. And let's go into why we know that happened. So currently the 5-MA is at 669.52, and we discussed in our video last night we expected 669, but it was higher than that. It pulled up to the 670. So that meant that the lower bounds and upper bounds of the 5-MA, so the lower bounds would be at 667, and seeing how the low today was 667.67, it pretty much nailed the lower bounds of the 5-MA right on the head, and the upper bounds of the 5-MA is up at the 671.50, potentially 672, because of as the market pulls upward, the 5-MA would pull upward with it. So by the time we do get to that point, it would be at that 670 range. Anyway, the 5-MA tomorrow, seeing how we closed at 669.12, is essentially going to be right at that 669.30 range, give or take. It's really going to depend a lot on what happens in the pre-market. If we see a lot of buying to the upside, then the 5-MA will be pulling very likely upward toward the 670. If we see more downside, so potentially if we see the market open at, say, 668 or 667, then we could see the 5-MA moving down to the 668.80 range, give or take. Now, that kind of just means we're still testing the level, seeing how we closed pretty much right at the 5-MA itself. So we'll take a look at the structures on the hourly chart, but I do just want to talk about the upper Bollinger and 20-MA really quick. So whenever the 5-MA is tested, and we've been testing it for 2 days now, so this has been thoroughly tested, that gives the market enough liquidity to move either to the upside, and the upside from here would be the upper Bollinger, or to the downside, which would be the 20-MA. I usually don't count the 10-MA as a level to focus on, even though the market can take to the 10-MA and then bounce upward. It's not something that happens very often, And the 10 MA is more so a short-term, uh, geez, I'm losing my train of thought. It's more of a short-term indicator of if the market is bullish or bearish. So the 5 MA being above the 10 MA means that, in simple terms, that the market is short-term bullish. If it was below that, then it'd be short-term bearish. Okay. Um, with that said, we just have to have expectations that with the 5 MA being tested, they will push upward towards the upper Bollinger, and currently the upper Bollinger is at 673.79. So it is pulling downward very, very slightly, and that's just because we had a selling day. If we continue selling, then it will continue pulling downward. If we are to move up and claim that level, very likely we'll be seeing all the way to the 678 range, potentially even 680. Okay, because as the upper Bollinger dictates, usually you close at or above that level. Day two, you generally see a higher high. So based on the upper Bollinger essentially being at that 674 range, a close at or above that would pull that to the 675, and then a higher high from there would be that 678, give or take. So that's just how I'm thinking about it in my head. And the 20 mile is currently at 662.45. That will be pulling up, but it's going to slow down if we do start pulling down towards it. Now, with the market basically being right at the 669 range, the 20 mile isn't that far away. It's only $7 away, so it's not unreasonable to see that tested within the next few days. We did not see the 20 watt tested the last time they did a little bit of selling a few weeks ago. Um, it got very close to it, but it did not hit the level at all. So technically we have not had a true 20 watt test in over a month now. Generally you see the 20 watt tested once a month. That's why it's called the 20 watt. It's basically the 20-day moving average. So 20 trading sessions. So very, very close to time of coming down to retest that. Now, going into the 4-hour chart, and you can follow along on your hourly chart, but it just looks a lot better on my end for the 4-hour chart. But I discussed in here last night in yesterday's video how I still have the drawings, I do. Oh, one of the shoulders fell off. Okay, so we will redraw that. We discussed how we're on this major buying channel bottom, and this buying channel can expand downward. Okay, so it's not like we break out of this channel and then it's just going to straight head into a selling channel. We still have to. There's still a lot more that has to break down within this range before it's really considered bearish. But for now, so far, we have not seen any bullish structure really built from this. We do see a little bit of bearish structure, and so far that's within this head and shoulders. However, if the bulls decide to go to the upper Bollinger, then they will just take the 673 range, create a cup, and this might look like an inverse head and shoulders, cup and handle, something like that. Just some form of bullish structure that's saying, hey, we're not heading downward, we're going upward. Then that's what the bulls would be looking for. Look for some sort of breakout towards the upside, claim the upper Bollinger. Now, again, for the bears, we just have to be patient. Either they're going to take the 5 mile test and move up to the upper Bollinger, and then we will take the day 2 higher high, short from there, or they will reject the 5-day moving average, and we will head down towards the 20 mile. Now I am going to change this line to be at the 20 mile, just so that there's a little bit more frame of reference on what everyone can kind of expect if this is going to be a test of the bottom of this channel. Okay. Um, this would be how you build bearish liquidity, but also really good bullish liquidity. And as you can see, if we do head down, then all the bulls have to do is turn it into a cup, and then we're back on the track of just absolutely destroying every bear, including me. Um, but with that said, we still need to kind of see structure built on both ends. And I'm just going to pull it down to the hourly just for a moment. Yeah, I mean, there's really nothing major in here. Potentially, you have a double bottom. If we're looking for the bullish upside, then that could have been a double bottom right there. But so far, it does look like they're just trading within that consolidation range, and I did discuss that in the video last night. Hold on, I want to draw a horizontal ray right there and right here. This is to highlight that consolidation channel, just so that's a little easier to understand. But basically, they can continue trading up and down within this channel, not building a whole lot of structure. So for example, they might build some really nice bull structure here, take it back up, and then all of a sudden we see it pull back down. These consolidation channels happen pretty much all the time after the basing move happens, and I believe I discussed that in last night's video, if I remember correctly. But the basing moves are essentially either the market's going to be in a basing move, which is this very large upside, or it could be, inversely a very large downside, and then they're in this chopping range. Okay, so that'd be a basing move. This would be another consolidation range. This would be a basing move. But really, this is a huge consolidation channel right there as well, which is funny. They built that huge level just to pull it up that much. Anyway, I'm just rambling at this point. I want to see more structure here, whether we're going to head up or downward. On the microstructure here, we have essentially both sides built. We do have the makings of a small head and shoulders, and we do have the making of a small double bottom. So we'll see. We do need more structure though. With tomorrow not having a lot of news, that might help us form a better picture into what Thursday or Friday might bring. But yeah, we'll see. That's the technical analysis for SPY. I wanted to also discuss treasuries tonight, but I'm going to wait on that. I will just quickly say that I am very bullish on treasuries right now. I know that I've discussed that period of where potentially 1 to 3 months after a rate cut that the yields will pull upward. We saw the 3-year auction today see a very, very slight upward pull. However, TLT saw no reaction from that. I mean, it pulled up it was a very good day for TLT. It was a 0.58% day. So, overall, I'm still very bullish. I'm really expecting this 97 range to be hit very, very likely within the next 2 months. It's really looking like towards the end of November, but that time frame can change. If we do have a major pull downward, then we will have to kind of rethink that window. But so far, just in the short term, I'm seeing this gap of the 92 being taken out, and from that, building a little structure heading up to the 97. So I've been taking December 31st calls between the 92 strike to the 96 strike. I don't want anything above the 96, even though we have this 97 range really tagged. We want our contracts to run in the money just a little bit, even if we are buying the 96, uh, you do want those to run in the money a little bit. So, yeah, TLT looks really good right now. I'll obviously be continuing to monitor it. Now, one thing I did want to show that was very, 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 very bullish, um, and that's this channel right here, which needs to be slightly adjusted because there have been a plethora of dividends since then. I need to adjust this for down there. Okay. We have officially broken out of a very, very, very long-term major bear channel, uh, major selling channel, excuse me. This is on the weekly time frame, so this has been since essentially, let's see here. Sorry, Weeble makes it so if you hover over the part of the chart where the line is, it'll block it out. Since January 2020. Okay, so this selling channel has been, really capturing the entire, basically the bear market of treasuries. And we've all known that treasuries have been in a bear market since, really the confirmation was in 2023. That's when it really just kind of broke down from major buying channels. And ever since then, we have been treading water, but now it's starting to look like we want to exit that bear market. We do need to see more buying. We do need to see the ADL picking up, but it is looking very good. So we'll see. Anyway, going to end the video here. I hope everyone has a great trading day tomorrow. Trade safe as always, and I will talk to you in the next video. And thank you for watching as always. Take care, everybody.